Okay, I'm going to do something a little bit different because usually I do these talks and I use up the entire half hour almost because we have so many assets. But what I'm going to do this time is a very short presentation, just focusing on what we do rather than the assets that we have. And that therefore leave a long period of time for people to ask questions. Because normally what happens, you only get in one or two questions, and there's usually a lineup of questions that people don't get a chance. So I'm hoping that this works out and that there's not a big dead period, but we'll find out. So I'm going to be talking today about Globex Mining Enterprises, which is a mineral property bank. What we do is we do exploration, but we also generate revenue through doing deals with other companies, and we also have a business of royalties. What I would like you to focus on while I go through this presentation is on the value model of what we have. I'm not going to talk about very many individual assets, but just about the concept of what we do. So Globex is a diversified company. We do pretty much anything has the potential to generate revenue. We have a lot of precious metal properties, gold, silver, platinum, palladium, base metal projects, particularly copper, zinc, but also lead and nickel, very often with gold and silver credits. And then we have a lot of specialty metals and minerals. Magnesium, rare earth, manganese, antimony, lithium, bismuth, cobalt, fluorite, uranium, dolomite, and recently hydrogen. Not that we found it, but somebody else found it on our property, which is a silica property. And we also have a lot of silica projects. So we're diversified is the idea. We also have a whole series of royalties, basically 106 royalties, most of them generated by people who have earned interests in our properties by doing the work. And we sit back, and if they get to production, we end up with a revenue stream. So other things about the company, we only work in areas of low political risk, particularly Eastern Canada, Saxony, Germany, and the USA. We have revenue, and that revenue is generated through options where other companies come to us and option a property in exchange for cash, shares, and a work commitment. They carry the project forward and hopefully in some cases to production. We also have joint ventures. We have only one joint venture, and we also have this whole bunch of royalties. The position of the company currently is we have about $25 million in cash and shares of other company. Actually, it's closer to $30 million. We have no debt. That is something a bit different in the junior mining sector. Number one, we generate revenue. We have revenue. We have money in the bank, and we have no debt. We own our assets. So what are the basics about the company for those who are not familiar with the company? We have 56 million shares out. That is after the company has been listed for over 40 years. We have never done a rollback. The reason for this, the small number of shares, is because we generate revenue. We don't have to go back to the market on a constant basis and issue more shares in order to pay for work. We have the deals that we do that give us the revenue to allow us to do our work and upgrade our assets. Fully diluted, we're 57.7 million shares. Management, principally myself and my wife, we have almost 13% of the company. The board of directors is a bit different than other junior mining companies. It's a professional board, 3 senior geologists, 1 mining accountant, and 1 senior finance professional. It's not doctors, it's not dentists, it's not the guy next door. It is people who are working in the industry who have know-how, whether it's technical or financial. Another thing different about us is we're on the senior Toronto Stock Exchange. We're not on the Vancouver, we're not on CSE, we're on the senior reporting exchange. We're also on 7 exchanges in Germany, including Frankfurt, and we're on the OTCQX International in the US by invitation. So talking about our assets, we have, it says here, you can see here the red bars. This is just showing how over time we've increased our asset base. It says 254 projects. Actually, as of this week, it's 256, but we won't quibble. And we have 106 royalties of that 254 that we talk about here. So you can see how steadily over time we've been building the asset base. The breakdown of the assets of the 254 is 127 are precious metals, of which 73 are exploration projects and 54 are royalties. 69 are base metal projects, 42 which are exploration projects, 27 royalties. Specialty mineral projects, 23 are exploration projects, 19 are royalties. Industrial mineral projects, 10 are exploration projects, 6 are royalties. You can see the breakdown. A lot of these things are already quite advanced. So if you look at those numbers again, in a little bit of a different way, 254 projects, 127 precious metals, 69 base metals, and including precious metals credits, and then the 58 specialty metals and minerals. We are very diversified. In some of these things, we have a goodly number of projects. For example, in silica, we have a half a dozen silica projects. And one of the things that's not shown here on this list is hydrogen, which is a new thing which has come up on one of our projects. We have 106 royalties. We have 9 active options. These options generate cash, shares, and exploration expenditures by the other company that is optioning the property. And if they go to the end, we end up with a gross metal royalty. Now, you may be familiar with net profits and net smelter royalties. We invented the thing called the gross metal royalty. And basically what it is a percentage of the metal that is produced, or the mineral if it's an industrial mineral. So for example, if we have a 3% gross metal royalty on a gold project, and 100 ounces of gold are produced by the refinery, we get 3 ounces. The idea is it's paid by the third party. It can be paid in cash or in kind, usually at our choice. And there's nothing to fight about. There's no deductions of any kind. Because what happens with net smelter or net profit, when money's on the table, people get silly and you start fighting about what is an acceptable deduction, what is not an acceptable deduction. With the gross metal royalty, there are no deductions. Of our 254 projects, 58 have historical or NI 43-101 resources, and over 40 have former mining operations on them. So one of the things about our projects, we only, I think, have 2 projects which could be considered grassroots. Their position plays beside a project that is going to production or has some sort of news factor. All of our projects, other projects, are advanced. They have targets that are already defined by geophysics or by drilling or surface showings. There's always a reason. It's not just land. Now, the map that you're seeing here, the large gray map in the center, is the map of the Abitibi of northern Quebec and northern Ontario. The black lines are major fault structures. All the gold stars are gold properties we own. The blue squares are base metal projects. The red stars are critical metals and minerals, and the green sort of diamond shapes are industrial minerals. You can see that we have a lot of projects in the Abitibi, and the reason for that is that the Abitibi is one of the main producing areas of minerals in Canada. So lots of projects. We own our projects. That's the other thing. We own our projects, which is different where other companies are trying to earn an interest in projects. We own them. If you go to the top left, you see the rest of Canada, then US, and you can see we have a lot of other projects in the rest of Quebec, in New Brunswick and Nova Scotia, as well as Saskatchewan, Washington State, Nevada, and Arizona. And on the bottom, you see there's a map of Germany showing the silver project we have in Saxony, Germany. And there's a map there showing Portugal, and we're in the process, hopefully the final stage, of acquiring a gold antimony project in Portugal. So we only work in areas of stable government where mineral rights are acquirable without conflict. We don't have to worry about dictators. We don't have to worry about assets being grabbed away. So I'm just going to talk quickly about 4 projects just to give you the idea of what we do and how things work. For this is an example up in the James Bay area, and we acquired all those blue rectangles are claims that we acquired for lithium exploration in the James Bay area. And company Brunswick Metals approached us and wanted to option the property from us because they were looking for a good project with lithium potential. So we said, fine. We worked out a deal. It was a 5-year option, cash payments each year, share payments each year, and they had to undertake a certain amount of exploration to earn 100% interest in the project. We keep a 2.5% gross metal royalty. So they're actually doing the 3rd phase of exploration now. They liked the project that much after the 1st phase. They paid us 100% of the cash, 100% of the shares up front, and carrying it forward with more drilling. You can see some values that they've intersected in some of the areas. Those red stars are areas where they've intersected lithium mineralization, and they have more now in that 3rd phase. They're carrying it forward. The dashed line around the blue rectangles shows the area of influence. So anything found within that dashed line area, our 2.5% gross metal royalty applies. So that's an example of how our projects are structured and companies go forward with. This is another project. This is in Quebec on what's called the Porcupine Destor Break, which is one of 2 of the main gold localizing structures in the Abitibi. This is north of Rouyn-Noranda. So historically, the property has 4.17 million tons of 5.4 grams gold, or that's uncut, meaning values over 30 grams per ton are not eliminated, is 6.36 grams. So that's talking about 727,000 ounces cut, 853 ounces uncut. Nice average width, 5.71 meters. So this was calculated at a price of $960 US per ounce. As you're well aware, the price of gold is much higher than that now. So, and also this estimate was based upon underground mining. We've done a deal with a company called Emperor Metals. They're in the 2nd year of the option. We just received a $500,000 cash payment, second payment, and $300,000 in shares for them to meet their 2nd year obligation. They've met all their cash expenditures, and they're looking for lower grade open pittable material. So the deal is $10 million cash over 5 years, 15 million shares, 12 million in work, and a 3% gross overriding royalty if they carry it to production. So they've done several drill programs. They've intersected high-grade material. They've also intersected wide widths of low-grade material, substantiating their concept of potential low-grade, large tonnage open pit mining. So again, we generate revenue over a period of years, more ounces in the ground being developed, the risks taken on by another company. We sit back because we own the asset, they carry it forward. Another example, the advantage of all the projects that we have, we said like we have 256 at the moment. This is a project we picked up in the James Bay area also of Quebec. And it is pretty much anything property. There's lots of gold, there's base metals, copper, and lots of potential in the property. You can see there's multiple zones either on surface as surface showings, high-grade gold, and there's also trenches with good values. There's also grab samples, and there's also drill holes with good values. There's an iron formation with gold in it. It's a really interesting property. We picked this up by staking. Cost us a couple $1,000s. On either side of us for miles, Azimuth are working, and they've got to deal with the Polish mining company. They're doing exploration. They've flown airborne. They've done prospecting, mapping. And if you see on the bottom right, there's an area, it says Persis nickel discovery. That is a new nickel discovery by Azimuth. You can see 8.42% nickel, and platinum, palladium 7.25, and so on. Right on surface discovery. They've done a whole series of drill holes, intersected good values. Again, the example of us having all of these projects all over the place, they find a discovery, a brand new discovery right next door to us. And you can see from the map, and if you go on our website, you'll see the geophysics, the geology goes directly through our property, and we already know that our property is covered with all kinds of showings of base metals and precious metals mineralization. So the advantage of our expertise in acquiring properties with potential, but also just the simple number and distribution of our assets puts us in the position where if someone else makes a discovery, we're part of the game. This is a map showing the yellow line is the what's called the Cadillac Break, and this is near the town of Cadillac, which is halfway between Val d'Or and the Rouyn-Noranda. The black outlined area is our central Cadillac wood property. Two former producers on the property with historical resources. We did some exploration, we've got some values, but we also discovered a new zone called the Ironwood, just to the north of the main fault. 243,000 tons, 17 grams, and open. So we just finished a 19-hole drill program to try to define the shape, not necessarily the grade, but to define the shape of the deposit, because we're looking at what is the potential of us or another group mining that small deposit. It is a disturbed property, so theoretically it should be easier to permit. There's road access, it's right on the highway. There is power, there is a town with equipment and a workforce right next door. Literally, you can see where it says Cadillac, that's the town of Cadillac. And again, it's halfway between Val d'Or and Rouyn. So we're looking to see what is the potential. So we did the 19 holes. We've announced in 4 press releases the results, lots of high-grade gold intersections. We've engaged a senior engineering firm to come up with a new resource calculation, tonnage and grade. And we've done a new 3D model. The idea is to see, can we mine it ourselves, or can we do a deal with another group and let them mine it? There's a new mining method called Nova Mera, where they actually mine using large diameter drill holes. You don't need a shaft, you don't need a ramp. What they do is they set up on the deposit. This deposit comes, we've proven with the last drill program, comes to sub-outcrop. So they drill down using these large diameter holes, which are 3.5 meters to 4 meters in diameter, or it could be less if required, less. And they actually crush the rock and bring it to surface. You can put it on the truck and send it to a mill. So we're in discussions with Nova Mera. They're waiting for our new resource calculation and our new 3D model, and we will see how we go forward. We may do it ourselves, we may let them do it, or we may do a deal with someone else. We'll see, but kind of interesting project. Also, if you see tied right onto the side of that, on the left side, there is a thing that says Kawagama Royalty. We purchased a 2% net smelter. Radisson are drilling there, and we have that royalty, and they are drilling and carrying the potential of the deposit to depth, as well as on their main O'Brien mine. There's a whole series of mines. You can see also further to the west, there's because it says the New Alger royalty, that also is under the care of Radisson, and we have a 1% NSR. So on about half of the Radisson property, we have royalties. They're spending large amounts of money to carry the project forward. They're getting excellent results on both of our royalty aspects within their package. And we're looking forward to them carrying that project to production and generating revenue for us. Again, how our model works. We let other people take the risk and carry the projects forward. So I'm going to stop there so people have a chance to ask questions. something which previous presentations they haven't had the chance. But the things I'd like you to keep in mind when you're focusing on the value of the assets, and I invite you to go look at it. We have a new website, to go look at our website and go through the long presentation there, look at individual properties, see what we're doing, look at the financials. By the way, I should mention on our financials, we show all of our assets at zero value. We do that because it costs a lot of money to generate each year during the audit to come up with a value, because you have to do it with the auditor. So we just across the board write everything off. So the actual numbers on our financials don't reflect the value of all these assets, a large number of them which have NI 43-101 or historical resources or generation of revenue from deals that are ongoing. So things to keep in mind: few shares out. The board is made up of senior people in the industry. We have income that sets us so far apart from most other junior companies. Income from royalties and options. We own our properties. We're not paying anybody else to earn an interest. So not only do we own our properties, we own our office buildings. That's one of them you see there. We own our vehicles. We own our core facilities. We own everything. We also own land on various projects. We have no debt. That's interesting. For most other junior companies, they have debt. That's when they get in trouble. We have no debt. We have funds available for exploration. We only work in areas of low political risk. So those are the things that I think I would like you to keep in mind, that along with the fact that we have this board of people who are in the industry, who understand the industry, and can help us in advancing the projects. And that's it.
Well, that was very concise today, Jack, and I think it's a very interesting thing. So we've got a few things. You always obviously discuss of junior mining and so on. But you're, as you were saying, on the main board of Toronto. Revenues wise, you were not a major, obviously, like Rio Tinto or so on with billions and billions. However, you do have positive revenues. You do make money each and every year, which is important. You do not have debt, as you say. So we do have a few questions. Please write more questions in the Q&A. We have 4 minutes to go through, but the message here, obviously, that Jack is trying to send to attendees out there: you are not investing in the same kind of risk as a junior mining company, but as a money-making, product-generating with high upside, very low downside mining play here in the commodity sector, as this sector is coming in an upward trend. So first, Tony, you were asking in the Cadillac trend, obviously the Ironwood gold deposit, and there's also other zones like Wood with 1 million ton, 5 grams historic resources. Do you plan to do exploration on the work on the other zone? I think Tony missed that you sent a press release with tremendous result, if my memory is correct, on Ironwood.
Yes, we have great results, wide widths, but more importantly, high grade. And that's what's so fascinating about that project. Yeah, we're going to do more work on the other parts of the project, but right now we're focusing on the Ironwood zone to decide how we're going to carry that forward, because we want to carry that forward. But keep in mind, we also have a vast storehouse of other properties that we intend to work on. For example, the Rouyn merger property on that same break, but further towards Rouyn-Noranda. We actually intended to drill it in the fall, but we got delayed by a government regulation, so we're starting in the spring. So yeah, we have a lot of things to work on, including on that Central Cadillac wood mine project.
And just one complimentary question of that, they're asking about the timeline of the project, but moreover, actually, are you going to do with this project the same that you do usually? Find a partner, keep a royalty, and have someone work on it and spend the money?
Yes and no. How's that for a concise answer?
In German, we say Jein, and it makes perfect sense.
Yeah, look, we've done the drill program to see if we can apply this Nova Mera system. If we can apply the Nova Mera system, We're going to be looking at the economics and deciding whether we do it ourselves or we do it in conjunctions with Novamera, or we let Novamera do it, or if we do it another way. The nice thing about the Novamera system, it's simple. It should be easier to permit, and it has less impact environmentally than other methods. Like I said, no shaft, no ramp. So we're open to all kinds of ways. If it becomes evident that it's a no-brainer, that we can make a really great profit from this using the Novamera method and using them as a contractor, we'll do that. But they've indicated that they'd be interested, depending on the results of the work that we did, that they would be prepared to take it on themselves, and we retain an interest. So all avenues are open at this point.
Absolutely. And Novamera is actually a surgical mining technology that allows you to make like drilling holes and follow the veins and then go on and not do basically diamond drilling from surface and then filling it up with concrete and just going and following the vein. So this is a very interesting technology for sure. Tony's also asking any update on your property with hydrogen potential. I think you did cover that, so we're going to skip that. Eric is saying if you would entertain the possibility of a dividend eventually to shareholders.
Oh, I'd love to get a dividend. Listen, we're the largest shareholder, myself and my wife, so I obviously want dividends. But doing a 1 year or a 2 year dividend doesn't make any sense until we have a ongoing long-term dividend source, like one of the deposits going into production, becoming a mine, going into production, whether it's 5 years, 10 years, 15 years. But if we can foresee the revenue coming in on a yearly basis, I'll be more than happy to provide dividend to our shareholders, including myself.
Perfect. Well, that's all the time we had, Jack. Thank you very much for the presentation. This is always very interesting. We really love seeing the share price of your company finally getting up into the sphere where we would like it to see on a daily basis and even higher than that. Congrats to you. It takes a lot of effort and commitment to do it. And we're going to be keeping on following all the great stories you have in the project, Jack. So thank you very much for your time.
Thank you very much for the opportunity.